Hello, everybody. Welcome to Deep Practice for September 1st. Summer is almost over. Summer of 2016. Amazing, isn't it? How quickly time goes? That's okay. Coming into my favorite time of year, the fall. And so, it's getting chilly in the UK as well. Yeah. We're going to go down to New York tomorrow morning, New York City, to the U.S. Open. It's how we wrap up the summer every year. We go down for the last week. Well, not the full week, but we go down to see several days of the tennis tournament at the end of the year. And it's always a lot of fun. And although this year we've got a hurricane coming up the coast, and so we may have some weather on, I guess it's Sunday or Monday they're anticipating. I haven't seen it. Yeah, the U.S. Open tennis tournament. Yeah, we love tennis, and I play it, and I certainly watch it, and I follow it pretty closely. So, be fun to do. Okay, tonight. I did have somebody write in a question, and I didn't get a chance to put it together, so I'm going to have to put that off until next week. I apologize for that. But the question is, if you're following 4 or 5 markets, how do you determine which one to focus on the next day? And it's actually fairly straightforward, but we'll spend a little time in talking about that next week. You were at Will says he's from the UK and he was at Wimbledon. Boy, I was in the UK 2 years ago and wanted to go to Wimbledon, and the guys I were with just weren't interested in tennis at all. And we actually went into a pub in Brighton one night to go see. And Andy Murray was playing, that night, and you would have thought that people would have been interested in that. But I was sitting between 2 people, and they were talking about soccer and some, football and European football, and some player and how he was, I don't know, not playing all that well, and so. And they were sort of yelling back and forth at each other, because they were sitting far apart from one another, and I was in the middle. I was trying to watch tennis, and I couldn't even do that. I was so frustrated. In any event, okay, let's get into deep practice. Tennis is tomorrow, not tonight. So I'll do the question, the member question next week. I apologize for that. I just didn't get a chance to focus on it this week. But we'll take a look at integrated day trading today with the daily 60, 15, and 5-minute charts. And then we'll take a look at the current market. So here we'll start with the daily chart. So what do you see here? What would you think about for tomorrow? And this is kind of an interesting question. What would you think about for tomorrow's trading? Looking at the daily, seeing how it's trading here, what would you consider for tomorrow's trading? How would you approach it? And it's kind of an interesting chart here. So Will said he had lots of Pimm's at Wimbledon. Pimm's, I assume, is like alcohol, right? Pimm's #1 cup or something like that. Is it very strong, or is it fairly mild? I always thought it was like a tea or something, but maybe I'm wrong. An early dip with possible up move later, says Howard. What makes you say that, Howard? That's kind of interesting. closed in low in uptrend. Yeah, okay, good. Yep, that's right. It did close on the low, and it is in an uptrend. But what makes you think that it won't go down lower as opposed to wanting to be a buyer there? I'm curious about that. Sharif says mature uptrend, maybe time for a pullback, possible hidden upthrust in the making. Key reversal bar below would cause up move to continue. Key reversal bar down here. Yeah, there was a bit of a spring down here, right? Get my pen, get the right color. There was a spring here. We see some pretty good volume on this, and that drove the market up. Pims says, Will, is a summer ladies drink. Cucumber, mint, strawberries, and such. Interesting. That's why I've never drunk it, I guess. Howard says, it can, but expect buyers to come back in. Yeah, good comment there, Howard. I agree with you about that. Let's see what else we've got. More comments here. Edmund says, I think it is jumping across the creek with the third to the last bar. 1, 2, 3. Okay, that's the third to the last bar here. Jumping across the creek with the third to last bar could have gone lower but didn't. I think it's going to test that bar and go higher. Okay, so we see potential testing of this in here. And Brian says ABC down move to the left. Yeah. ABC down move on the left. Possible absorption at the highs. In here, yeah. That ends with a shakeout. Then, and this is the ordinary shakeout here. Then a push above, but the rally is not very convincing. The volume is average, and immediately reverses with a poor close. Anticipating, that's this close right here. Yeah, take a look at this close, right? This is more serious than not, because not only is it closing under this high, but it's also closing right back in here under that high as well. So this is not really that bullish behavior. Doesn't mean that it's going to tank here, but that there might be more consolidation necessary in this, okay? We spent time, as Brian says, not a really stellar rally. It was pretty good up until this point here. We start pulling back. Then we go sideways, maybe because it's some absorption here. But I think if we had more data, that the market came down. And so we don't have a really robust rally going on here, though clearly buying came in at this point, right? So the top bar immediately reverses with a poor close, anticipating a pullback reaction, but we're on top of previous resistance. So the down move may not have much legs before buyers step in. So I'd look for highs first for a short, then around 1900 I'd watch for buyers. Okay, so maybe coming down to the low of this and look for an opportunity to short up in here. Okay, good. Kevin says looking for a long trade as market pulls back to 1910. Not sure why 1910, but okay. Good. I would expect to see some follow through from the last bar, says Will. Supply has made its presence. Would expect a test into 3 bars back, the shakeout bar down here. It's possible, certainly. Dean says, respect a retracement to around 1910 That keeps coming up, 1910. Must be, I see 1900. I'm not sure where 1910 is coming from. But that's just me, probably. So expect a retracement to around 1910 for first target. Mid-chart, the breakout bar is on very average volume, and the follow-through after until the spring. Good lift-off with price pushing higher, but poor close on last bar. Poor quality demand so far. Yeah, we're not seeing a tremendous amount of volume coming in, right? And this makes it suspicious, this bar here. 1910 is the swing high on the left-hand side of the chart. 1910. I see. Okay, that's 1910. Good, I got it. Yep, top of the wide range bar, third from the right. That's 1910 here. Well, it's probably a little higher than that, but maybe not. If you draw a trend TLS, the market is wedging. Wedging? What's a wedging? Look for short, then potential long around previous two highs. Okay. And Sharif says 3 up bars with higher lows and higher highs, maybe time for a pullback. 3 up bars. This is a down bar. Okay. The way we do ups and downs is if the bar closes above the close of the prior bar, it's up. And so it closes above the close of the prior bar, and it's up. Here, it closes below the close of the prior bar, so it's down. Okay? Here, it closes below the close of the prior bar, so that's down. This closes above the close of the prior bar, so it's up. This one's down. This one's down. So 2 down bars in a row. This one's up. This one's slightly up, 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 down, 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 down to level, and we don't know. Okay? I think I got those right. Yep, so you get that. Okay, that's good. It's just the way of talking about it, and so that you can focus on the fact that sellers came in and pushed the market down. Doesn't mean that the market is going to fall out of bed, but that the market is potentially going to come down. Here's the way I would view this. We are in an uptrend, no question about it. It's not a stellar uptrend. It's not a rip-roaring uptrend, but we are in an uptrend. And we did have buyers come in at this point. And we're coming back into, we've got several different levels in here, but we're coming back into this area in here, which should prove to be some support for the next day. So this comes down to whether lows are made first or highs are made first. Okay? If lows are made first, I would be looking for a long opportunity down here. Okay, so in other words, if the market falls in the overnight and comes down, then I'd be looking for an opportunity to go long, somewhere down in here. Now, it may come down and test this level. It may come to this point in here. Hard to say what it's going to do or where it's going to go to. But the point being is that if it's coming down into here, I want to be looking for an opportunity to go long. Why? Because I know that there are buyers down in here, right? We know that the buyers push the market up in here. So the odds are very good that when we come back in to revisit this area where buyers were, that the market will again be pushed up. Okay? It's not like we've got, a huge down bar. Like if this were up in here somewhere, right? If we rallied up and then came crashing down and the volume was like this, right? Massive volume coming in, huge volume. Then, going long would be nuts. You'd be standing in front of a freight train coming through. You would anticipate a very minor pull back up, and this thing to come down and probably accelerate to the downside. Okay, but we don't have that. We have just sort of an average price bar here. Nothing, if you look at the last few bars, say back into, I don't know, back to this point here, where we have this up move, right? You've got a few that are more narrow, couple that are larger, but if you kind of average those out, I'll bet this is very close to being the average range for the rest, for the 1, 2, 3, 4, 5, 6, 7, 8 days, almost 2 weeks here, right? It's pretty much an average size bar. It's not large. So therefore, I'm not anticipating, you would expect some follow through to the downside, but if that follow through occurs in the overnight, then we're going to be looking to go long down in here. On the other hand, if we go down a little bit and then start moving up, and we know that there are sellers in here, right? So there's buyers down in here somewhere, and then over here there are sellers. Let me do it in a different way. So we know that there's buyers here, and we know that there's sellers up in here, right? So it all then becomes a question of which is done first. Do we come down first into the buying area? And if so, then we would anticipate buyers to step back in, and we'd look for an opportunity to go long. Or if we come up first, we would anticipate sellers to come in because they're going to kind of drive the market back down again. Does that make sense to people? When you say fall first, go long, do you mean in the whatever season it occurs? Probably the Asian session it occurs, probably the Asian session, or do you mean the U.S. session? Well, most of the volume is still in the U.S. session, so we would be looking for the Asian session to push the market down lower, and then early in the U.S. session, we would, or maybe pre-market, pre-U.S. session, we would be looking for the market to consolidate and give us an opportunity to go long. On the other hand, if it kind of meanders and goes up, and we make highs first in the U.S. session, then we're going to be looking to go short. But it's just a way to think about the market, looking at the last few days of trading, and this is how we piece together context. Kind of what I'm doing is piecing together market background, the Wyckoff story, so to speak, right? And right now, the Wyckoff story, look at what the Wyckoff story is. We have, in terms of waves going up, we've got a strong wave coming up in here, and then a potentially shorter wave, but we don't know if that's the end of this up wave or not. We won't know until another bar or two is done. So we are anticipating that maybe we'll still get further upside here with after a day or two of consolidation coming in to test this, right? We know that, as Edmund said, we kind of jumped across this creek in here. We've got a creek of supply coming back down. If it tests it here and the test is good, we can see the market push back up again, consolidate maybe over a couple of days in here, and then drive back up. But the background story is that we are in an uptrend. Potentially we've got shortening of the up waves, but it's a little too early to tell that at this point. And so what we're looking for now is kind of combining Wyckoff with a little bit of George Taylor, where he would be looking to see, this is kind of right out of Taylor's playbook, if you will. We've got 1, 2, 3 highs here. 2 days are up, and then he's got a sell short day. And now we're looking for a buy day if lows are made first, but if highs are made first, then we would look for a sell day, another sell back down. Okay? So that's all I'm really doing here. Fairly straightforward, fairly simple if you understand the kind of context of the market, the market structure, and what is likely to unfold here. What's not likely to unfold is two things. One is the market go rip-roaring up here because of this bar. And what also is not likely is for the market to tank because of these bars, and really this bar too. We're not seeing real negativity coming into the market yet. So because of that, what we're looking for is a day that's going to trade somewhere in really kind of in this area here. Okay? And we want to try to figure out where the high is going to be made and where the low is going to be made, and try to get in a trade as close to those levels as we can. That's kind of the way to think about day trading off of the daily chart. I managed to get his book. It's very hard to follow, understand regarding reading the same page time after time. Yeah, the way to deal with that, he was a terrible writer, an absolute terrible writer. And this is Taylor, George Douglas Taylor. For those of you who don't know, he was a commodities trader in the 1950s and early 60s. I think he traded wheat and corn on the Chicago Exchange. He was a very good trader. And he wrote a short book on his method. And he kept a book and had a very mechanical kind of way of looking at things. He would look at the kind of penetration that occurred below lows and above highs, and he would kind of be tracking down and using that kind of information and kind of trying to be very, very, what he called a book, and he kept it very, he was making notations in there all the time. And you can do that. I tried doing that for a while. I found it wasn't that useful, truthfully, for me. You may find differently. What I found to be most useful was just his concepts of every couple of days, every 2-3 days, we're going to see the market will, expend itself from that side, and we will see a bit of a reversal. And that what we want to try to do is, so for example, let's just kind of see it here, because it's a very useful thing here, right? So here the market's been coming down for a few days, right? And so just to kind of track this from Douglas's perspective, we're coming down here 1 day and 2 days. So now a couple of days down, he's looking to go long. He would look, probably lows were made first in here. Didn't get much of a push up, and we get a kind of a mid-range close. He would see this, he'd be noting this in his book, and he'd see this as still weak, right? So he would be looking for either a flush down below this level to take out those lows and then go long if that was made first. But you can see that that wasn't made first. What was made first was the high, right? And that was before we got the flush down to kind of and create an ending action for this. So highs were made first. He would short up in here somewhere and look to, and he might hold this another day because the day closed poorly. He would look for follow through the next day. And that's exactly what happened. Then we get that flush, right? Lows are made first, and he would be looking to exit out and maybe buy in here. Now he's looking for lows to be made first on the next day and an opportunity to buy. They didn't really give much lows there, and we would push up. We go up for a couple of days in a row. This is kind of an inside day or pretty much a level day. It's just a repeat of another day. So he had rules for that he would ignore that in certain circumstances. I wouldn't even go into that kind of detail, but he did. But I didn't find that kind of stuff useful. We get a large day up. We've been going up now for 1, 2, 3 days. He'd be looking for a sell short day, looking to sell short with highs being made first. That occurs here. We might get another little bit of follow through the next day, but look at how it closes. So now we're going to be looking for lows to be made first, and so on and so on. Okay, that's kind of the way he did things. And so the way to read his book is not to go through all the details, but kind of get the concepts. And it helps to kind of draw out what he's talking about. Try to draw out the price bars, the daily price bars. And you'll begin to see the guy was pretty much a genius, a terrible writer. He wasn't that educated in terms of formal, English and what have you. And he had no sense of punctuation or sentence construction. But he was pretty brilliant in terms of his sense of how the market flowed from one day to the next over several days. And where he would be looking to make a trade. And there were times when, he had these rules which are kind of important too to understand when you're looking to make a buy first, but make lows first, but the lows are too much. So now you're going to be looking for actually to sell short on a buy day, so to speak. And basically what that is lows are made first, but they go deeper than what you might what would be anticipated. Let's say, for example, we were looking to buy, this is not a bad example. So he'd be looking to buy in here, maybe down in here somewhere, right? But what happened, it went down too far, so he would look to buy and then hold and look for follow through the next day. But here the market went down too deep, and he would be buying down in here, but he'd be selling out at yesterday's lows or the 2 or 3 day low back. I mean, that kind of stuff is useful. I probably, it's been a long time since I read it and studied it, and it's become part of his basic idea of flowing with the market. Has become part of my way of trading. And it's, I emphasize the daily highs and lows, or the, a couple of days back, the highs and lows. It really comes from him, because that's where he excelled, looking at those daily highs and lows and understanding how the market traded around them all the time. And sometimes, and he's got in his book, he's got where the market makes a higher low first, but lows are still being made first. And so on and so forth. But anyway, that's enough of George Taylor. George Agnelli covers the same topic, but in an easier to read format. Yeah, I was going to mention Agnelli, and I was going to say he created this, I forget now, the RSS system or something like that. I would stay away from that. I didn't find that to be that useful. You might, take a look at it, but I would try to parse out what Taylor was talking about. rather than, because Agnelli kind of created his own system off of Taylor. And I always believe that it's best to go direct to the source and read that through, just like with Wyckoff. A lot of guys have, like Bollinger is got a lot of his information from Wyckoff, and trades Bollinger Bands, which is basically a Wyckoff system. And Dick Army, Richard Army, with the arms index, or the what's it called? There's another term for it. The proper name is the arms index, because it gives him the credit. But that's purely Wyckoff. It comes out of Wyckoff. Another guy that has done stuff with kind of a Weiss wave is I'm blanking on his name. What's his name? I forget now. But there's other people out. Yeah, Tim Ord. Thank you. Equivolume. Yeah, again, it's pure Wyckoff. Yeah, I played with Equivolume for a long time. I did that with David Weiss. We actually had fun doing that stuff. In the end, I kind of gave it up and just stuck with the normal price bars, but kind of interesting stuff. Okay. Anyway, yeah, look at it, but focus on Taylor's stuff. Don't go down the wrong path of Agnelli. That's what I would suggest. All right, so I think we've beaten that horse to death, right? So let's move on. Just a quick reminder before we do, we're on normal schedule. We'll see you next Thursday at normal time. Okay, so here we are, and let's focus on the daily chart first. And here's the daily chart. What do we see here? What do we see, and how does that affect what we want to think about in our trading? Okay. Lows are made in the overnight, right? Lows were made first in the overnight. Okay. So what does that mean for us? Think this through now. Think this through. Means we're looking for a long. Okay. We're looking for a long, yes. But must push up beyond the 2-day high. Okay, that's over here, the 2-day high. We're fairly close to that. The odds are pretty good that we'll get there, right? But what is that? Look, let's go back to what we were talking about before. Now, this is what the day looks like here. So far. What does that mean for us? So Brian says it's already rallied off those lows. So if the coming rally is weak in the early U.S. session, then we're looking for a short. Yes, exactly right. Exactly right. The lows have been made first. It doesn't mean that we can't go long, but our long is going to be more of a little scalp rather than for trading, for more than just a couple of points or so. We're going to look for an opportunity to go short up in here, because what happened? We come into the area where we know buyers were, and buyers stepped in. Now presumably, okay, we've got to anticipate a little bit. So we're going to anticipate that the buyers will somehow push it up into the area where selling came in. And so we don't want to be just hanging on to a trade and get where we know supply exists, right, from earlier. We want to be looking for an opportunity to go short. Think about it this way. What we're looking for is where daily highs and daily lows are going to be put in. And we know that the low got put in down here. So will the high be put in down here somewhere? Okay, up here somewhere. Somewhere up in this area. That's what we're looking for. And if it is, if the daily high, and we might see a bar that gets like this. Okay, we're expecting some downside here, or it could go down lower, it could close down in here. But we're looking for another down day because of this bar, right? Doesn't mean that it's got to happen that way, but that's what the odds favor. Obviously, if the market is screaming up and we don't see an opportunity to go short, we don't go short. We don't stand in front of a freight train. If we get a big day up like this, we don't want to stand in front of it. But assuming our model from the night before is correct, we're looking for follow through to the downside. We may not get much. We may only get, it might do something like this. Who knows what it's going to do? But we have a good idea that highs will be made up in here if the supply comes in, and that's what we're going to look for. Does that make sense? I'm hoping this makes sense. Okay, good. So let's see, end the slideshow back here. Okay, so here we are, just again to reorient where we are. Market dipped down into the area where we know demand existed, and it came in. And now it's coming in to this area up in here where we know supply exists. So we would be aware that the market may have difficulties coming up there. Okay, so now let's go to the hourly chart. And here's where we are. What are we seeing on the hourly now? Obviously, down here is here, right? And up here is here. Is the market, based on the hourly chart, does the market have strength, or is there weakness to this market right here and now? It's strength, right? Yeah, it's strong. Choppy start, but now some decent ease of movement up, some flow is to the upside, so there's some strength at the moment. Yeah, there was accumulation here, buying here, some buying in here, more in here, and now marking up in here, okay? So the market is strong at the moment. So if it's strong, what do we expect? We expect higher prices, okay? So although we're aware that somewhere up in here, selling is likely to emerge, up in this area somewhere, at the moment, there's strength. And so we can look for opportunities to go long, but not for a big trade, right? Just for a small one in here. Okay, and the same relationship exists here on the 15-minute chart, and we can start to put in a little bit of trend line in here. on a second. Let's go back a little bit, see what else is here. Yeah, that's right about, isn't it? Okay. So now, here's the 5-minute chart. And what I did was I put in for us the lows that were made down here at 1909, the overnight low, Globex low, okay? This charting, by the way, this is multi-charts again. I like this feature where I can label this. This is very good, very helpful. And I also put in yesterday's low, okay, because we came up to it. Notice that we came up to it here. Market pulled back. We rally up again to it and pull back a little bit, kind of again. And now we're going over the top of it again. So it could be important. Okay, it could be important. And I've also got yesterday's high up in there as well. So let's see how this market starts to go. Okay, so that's pretty clear for everybody. And we can also put in trend line in here if we want to. Yeah. And so if that's our trend line, what is this telling us right off the bat? Oops, I have to leave it. It's the funny, this has a funny characteristic to it. Yeah, we're getting a little overbought, so we're kind of anticipating some sort of a pullback here, right? And if we're going to get a pullback, where might that pullback go to? Yesterday's low. Yeah, because right? This is not rocket science here. This is fairly straightforward stuff. It's just kind of laying this out. And look at what you've got here. You've got this line in here. Right along there. Let's see how this plays out. So we are about a half an hour out from the US Open, okay? Maybe not even quite that at this point. Let's just see what the time is here. Yeah, 9 o'clock. Oh, so we're a half an hour out from the US Open. So we can see that there's strength. We were talking about this earlier in the hourly chart. Let's kind of leave the hourly for us here. We can see that there's strength there from this. And from the 5-minute. You can see it on the 5-minute. So now, if there's strength in the hourly, and this market comes down to yesterday's low, which we know has had a fair amount of trading around it, what's our plan of action here? And what do we want the market to look like as it comes down there? We want to go long at yesterday's low if there's a weak pullback. Okay, so what are we seeing here in terms of pullback? Are we seeing a little ABC. Well, the ABC, yeah, it's kind of choppy. I don't know that there's really an ABC in here. Price would be making the low first on the 60-minute price bar, or do you only look at dailies for that? Now, only look at dailies for that. That's getting too kind of crazy. You can do it that way, but it starts to get kind of crazy there doing that. You don't want to see a lot of supply, says Brian. And a long is setting up. Yeah, notice that when we came here on this price bar, right here, the market came down, we saw volume pick up, but look at the close. Somebody was in there buying off of that. Now we're coming back down to this level again, and let's see what happens. Does it just crash through this? Looking at the volume, can you see what's happening here? As the price acts, yeah, we're getting some volatility right around the U.S. Open, right? This is about, there we go. Yeah, 9:30 was, I'm sorry, I should have made that point. Here's the U.S. Open, and now we are into the U.S. Open, into the U.S. session. And Brian says he'd go long in here. Okay. Can do that. Keep in mind, we're playing the yesterday's low and we're playing the hourly. Right? That's really what we're trading. We're not trading the 5-minute. We're trading the 5-minute for entry purposes, but we're really trading this up move here on the hourly, and we're doing it off of the 5-minute chart. Okay? So now we're back down to where we entered, and the question is, are we going to get stopped out here or not? I'm not sure where our stop is. Presumably it's down below here somewhere. Okay? Well, let's see what happens with this. Look at that volume come in, and what's it doing? Go back to this. This is the end of that 5-minute bar right here. And we can tell that, I don't know if you can see this or not, but there is right here 10:15. Okay? So we can also look at the obviously these trend lines are not working for us, so we can get rid of them over here too. I'll get rid of this. Whoops, I just cloned that. I want to remove it. They're not useful for us. But we can see on the 15-minute chart that we've come down a couple of times, but we're refusing to go lower, and we know that that's yesterday's low there. Okay. It's holding the lows. There's no follow through to the downside, says Howard. I'm sorry, says Brian. And I would buy that last bar, says Edmund. Yeah. I mean, that's right. That's the close. And we saw volume come into this a couple of times. We see the volume pick up, and we don't go anywhere. This is kind of a form of bag holding, right? The volume. Let's just back off of this a second and see this go through, just this last 5 minutes. So the first is up, the first minute is coming up, then a little more. Now look at the volume come in, okay? So now if that's real supply and not being held by buyers, then the market should go down. But look at what happens. It goes up instead, right? That was the last bar there. So we were on the lows here, and then we didn't take off to the downside. So somebody is in there holding the bag for sellers. Somebody, a lot of people were selling, but there were a lot of buyers going there as well. So yesterday's low, as it often is a line in the sand that that people are buying against. And so this is a good spot to go long. We have a clean support level. That is where the market stopped yesterday. We came up through it. We've traded around it a couple of times. We come up through it. The hourly is still showing strength. The 15-minute is volatile, no question about it, but there's a problem getting down below yesterday's low, and we can see on the 5-minute that they're trying to buy in here. Okay? Yeah, some bag holding, that's right. Buyers are protecting yesterday's low. Sharif says, I have two conflicting beliefs. One, the more times support is hit, the more likely it will break. If price hits support multiple times and cannot break, that's bullish. Well, look at don't think about how many times it hits. You want to say, okay, it hits, but what is the price action there? If we close this bar, if this was, let's go back here. If this was the close of this 5-minute bar, then I would anticipate downside, right? I would anticipate this not holding in here. That we would see more negativity coming in. This is just not able to hold because it's got that bearish look. But instead, so you've got to, it's not so much the number of times, but what the price does when it gets there. That's always what we're looking at. And you can see look at the buying that comes in here. We come down, not much volume, right, to here, and then look at what happens. A lot of buyers come in and step in at that point. Okay. Now, we're not moving off of this, but look at this last bar. Each of these bars is kind of flipping the Weiss wave back and forth, right? Look at this last bar. I'll back it off one. Look at this last bar. We're just not getting a lot of volume off of it to the downside. And since we're at support, we're concerned about downside volume, right? We want to see if this is going to hold or not. The lows are lifting, but not quite. Now we get a little downside volume. So are our longs in trouble? Well, we've bought near the danger point. So if we have to let this trade go, we know that a close under this low, right, under these lows here, a close down here is not a good sign, and we want to be out of the market if that's the case. And that's the beauty of buying near the danger point. And this is just a lot of volatility going on and a lot of we've been going sideways for almost an hour here since the market opened. And so it's got to get going here pretty soon. But once again, the market comes down, and look at that kind of bullish behavior and no volume coming out. Maybe that's it then. Maybe we're testing perhaps. Yeah, we're testing. A lot of Sturm and Drang in here, but the sellers are not able to take it down. Now we're starting to see more volume coming in and a couple of price bars coming up. Let's see if we can hold in here. So that's the end of that bar. And we're starting to see volume build to the upside. Can we get it going? That's the key question here. Now we get a little lift off. Now you see that we're definitely bullish in here, right? We've got to break these highs, but look at the hourly, and we're only 5 minutes away from 11 o'clock, right? 10:55. We're only 5 minutes away from completing this bar. And look at the 15-minute chart. Same thing, 5 minutes away from completing this. So even if it closes here, we're still bullish, right? So let's see what happens with this. More volume comes in. That's a little bit of a test bar in here, kind of subtle, but it's a down bar. Didn't draw out a lot of volume. And we've got, look at the hourly and look at the 15-minute chart. We should be able to at least get up there and test those highs. And, you know, if we wanted to, we would put in like this, and we can also do, whoops, sorry about that. And see if this will be helpful to us or not. Volume is trying to drive up here. I'll adjust this. So we have a lot of volume coming through, and presumably this is going to push us up higher. The hourly is still strong. The 15-minute chart, sorry, it's hard to do all this. The 15-minute chart is still very strong. Hard to do all this on one screen. So what do you think about this? Edmund says, sellers got exhausted. This makes me more confident to think it might break the high. The high of yesterday, you mean, up in here? Or the high over here on the 5-minute? No, the 5-minute resistance. Yeah, and this bar right here, let's go back to this. This told us that it was going to break the high here. This also suggested that it was going to, and as we came up into this area, we saw volume pick up. So the odds were very strong that we would break that high. This was a little test beforehand, and we sometimes will see this. The market will test right at resistance, and that's another indication that the market is going to go higher and break through that resistance, because if there was supply at this point, the market would come down. It's struggling to go through, but I see that frequently, and I don't ever really remember that failing too much. No real result from effort at this point. Yeah, there's a lot of effort in here. It's making progress. It's higher lows and higher closes, but it's not showing stellar move, right? A lot of effort, but getting higher lows and higher closes, so maybe absorbing. Could be, but we want to be aware that we've got a lot of volume here, and with all that volume, we're making progress up, but we're not making great progress up, right? After breaking the high bars are getting narrower on high volume. Could be selling coming in. Could be, but as long as we're still making higher highs and higher lows, we want to stay with this, okay? There we go. A lot of demand coming in here. A lot of volume anyway. Now notice the 15-minute chart. We have some selling in here. This bar. This volume. Okay, we want to just note that, be aware of it. What might that be telling us? Ready to exit at an overbought condition, and we want to get out now. Yes, exactly right. Out here, we're overbought in an area of supply. That's right. That's right. So we're just about going into the noon hour. Notice the 15-minute bar. Notice that high volume up. I'm sorry, the wide range up, and look at the close. Minor climax on Weiss wave 2 at the overbought. Yeah. So why not make a trade in here? I'll go short here, says Sharif. Yeah, this would be a spot to make a short trade. Look, we're in overbought condition, right? So the odds are pretty good that we're not going to go higher. We don't know that. We could just kind of go sideways a little bit and, you know, hold gains in here and then go up again, right? That's a possibility. What are some of the other possibilities that this market could do? Brian says, I'll let it show more weakness first because of the strong upside volume in the background. Okay. It could go down to test the support at 1930. Yeah. So it could come down here and test this. That's right. And what else can it do? It could tank, or it could take off to the moon or go sideways. Well, it could steepen the up channel for a real climax. Yes, it could. But look at, we struggled through here. And then we had this. This looks like a buying climax to me on this 5-minute chart, right? A buying climax in here. So we could come back down and go lower, retest yesterday's low. There was a lot of trading over here, and this would be a line in the sand. We wouldn't want to see this break, would we? Because if it broke with all of this trading, then this would suggest this wasn't real support, but it was something different, and we could come down lower. Remember what our game plan was. We were looking for lows to be made or highs to be made first, and we didn't quite get that. But if this is the high of the day, then we might come back down again. Okay? Of course, we don't know that. We don't know that. But we're short now, or at least some of us are. And so if the market holds gains and just goes sideways, we've got to get out, right? If the market comes down and tests and then starts coming up, then we've got to get out. But what we're looking for is for the market to come back down maybe to this yesterday's low again. We don't know if that's going to happen, but we have to see if it will. So let's see here. It could also go down to the demand line. Yes, it could do that too, down here, which is basically the same as this area. But we're at the edge with little risk with our stop, so worth a short. Exactly right. We're at the edge. We have a little bit of climactic action in here. We have some indication on the 15-minute chart that some supply came in here, and we had some supply earlier. The hourly is also now, we're just finishing up that last hour, also showing that it couldn't hold those gains. And we know that this is in the area where supply came in yesterday. Okay? So although we're short, we want to be really cautious about this because we did get some pretty decent move up. So let's see what happens. Is there anything on the chart that is suggesting that we will either go up or go down right now? Is there anything on the chart that's giving us a hint as to what may come? 15 minutes showing lack of supply. Okay. Volume increasing to the downside, so I'm okay short. Where's the volume increasing to the downside? On the Weiss wave. Yeah. So what are we seeing on the Weiss wave? And is that significant? What are we seeing on the Weiss wave? Supply is starting to build, yeah. Isn't this more supply than we've seen so far all day long? Right here, and more sustained supply. I mean, we certainly saw volume, we hit pockets of supply here where we came down, but they were for 1 or 2 bars. Now we've got several bars here, and we're building. Granted, it's not as big as this, but we're oversold up here. So now the question is this supply going to be meaningful or not? We don't know yet. A little attempt at a rally. Notice the 15-minute chart is trying to hold in here. We'll see what this rally does. And we want to be ready to pitch this trade out if we start getting up above our entry very far, right? We don't want to hold this trade if it starts to show us that the market has some strength to it. But what is this telling us in here? The rally is weak, right? The rally is weak. There's no volume. In fact, this is the weakest little couple of bar rally that we've had since the beginning of this thing, right? Short this no demand in here, okay. We're not quite done yet, but you can short in here. Excuse me. Let's see what happens with this. Edmund says he'd take a short in here too. What's the nature of the price action that we're seeing in here? Aren't we getting a little bit of downflow here, a little bit ease of movement coming down? We hadn't seen that earlier. Excuse me. And the Weiss wave is starting to show us that downside has got a little more to it than the upside. And look at the 15-minute chart. Here we were trying to hold the market. We couldn't do it. And now we've been coming down. Okay, we're coming into support. So we might see this market try to rally again. Okay. And we are seeing a little bit of shortening of the thrust here. But the 15-minute chart, this is kind of a deep pullback so far. And maybe that's okay. Maybe the market's going to try to rally off of this. We'll see what this rally does. Almost a 50% pullback in the uptrend coming to possible access line. Yep. So we'll see what this does. Oh, the error can be fixed by, let's do this. Unclick update every bar. Yeah, there we go. Okay. So we won't get the full thing until it's done, but that's okay. So fairly weak rally so far. Question is, can it get above that and start to push up? We've got support down here. And we got a little resistance along this line. So can it get over that resistance line? If it can, then we might see it come back up into this area up in here somewhere. So let's see what happens with it. So we want to be very attentive to this and watching it very carefully. Make sure we're not going to get hurt by the market pushing up. So, yeah, Dean says, I was watching the ABC pullback. Now notice that we do have an ABC here, and that is typically corrective, but it has to push off here. And look at what it's doing so far. Maybe it's testing in here, I don't know. Let's see what happens. But we're not really seeing much of a push off. No extra volume coming in. Look at the 15-minute chart, showing us that there's not, it's, you know, this bar is wiping out all of this. We're not able to rally in here at all. And if we wanted to, we could start to think about and the hourly is starting to look weak. It's not looking strong. Let's put it that way. I think the 15-minute is telling you that this bar here, this is just not strong. This is not the way bullish markets act. Okay, even though there's not a lot of volume here, we're in the noon hour. It's 1 o'clock in the afternoon, so we're not going to see a lot of volume coming in. But the Weiss wave helps us in that regard. It shows us that since this large up wave, we haven't seen any kind of demand really materialize here. And now we start to break down. Trying to hold this line. Remember, here we are here. Look at the hourly now. Now we're coming down below last hour's low. The 15-minute is looking weak, although there's not a lot of volume there. It's still suggesting weakness in here. Oh, and Dean wanted to short that bar again, I think back up in here somewhere. Yep. So it's trying to hold in here, but look at the 15-minute chart. That's not suggesting much strength in here, is it? And look at the Weiss wave. The volume has built to the downside. And we're breaking the demand line. That's a good point. We're breaking that demand line, really weakening it here. No ability to rally off of this. Look at this. If this was real support, we should be popping right off of that, especially now that it's getting to be close to 2 o'clock in the afternoon. Okay? This is the time, around 1:30, 2 o'clock, it's the time that an afternoon trend typically starts. And we're not seeing any ability to rally off of that. So look at the hourly and look at the 15-minute charts, both of which are showing us weakness in here. But again, we want to be cautious. Always want to be cautious. Make sure that we're not getting ourselves in trouble. Notice the 15-minute chart, just not showing any kind of strength in here. And now we start to see this. We've broken that demand line decisively. So obviously, where are we going to? Yesterday's low, right? Everybody see that? You all hear me out there? Yeah, okay. And if we come to yesterday's low, is it going to hold? Do you think it will? We're not there yet, right? But do you think that this has got a good chance of holding in here? Yeah? Okay, let's see what happens. Don't see a strong down move, so hard to say. Take a look at the daily. Take a look at the daily over here. Think about it logically. Why would we come all the way back to yesterday's low if it held beforehand? Why wouldn't this hold in here and push us up if yesterday's low was really the low? Was really support. Was really support in here. Why didn't it hold at a key level of support here? Why not hold and drive right back on up? Why was it so weak? And if it was so weak, would we expect yesterday's low to hold? Okay. Based on all that trading to the left, yep. Hold the short, it should break lower. It's to suck people in so they can bring the market up. Yeah, well, that's right. Look at the 15-minute chart in here. Whoops. Sorry about that. Look at that 15-minute chart. I'll open this up. There's yesterday's low. Is there any reason for it to hold? No. Okay, now, so where is this market likely to go? Looking at the 15-minute chart. Another one of those damn things. Yeah, exactly right. Exactly right. Yeah, it's going to go down to the low of the day. That's the odds, right? That's the good odds. And we're 12 points away from that. Okay. And if that's the case, how will this end? How will this day end? It will end on its low, right like this. It'll end down here. And it will have made its high, not quite first, but it made its high where supply was and then came down. So let's see if that's what happens. Let's see if that's... Notice the volume at yesterday's low. Should we buy this? Is this climactic? No. No, not looking at the 15-minute and the 60-minute. Now, there's some buying coming in on the 15 and the 60. Let's see how that materializes. Let's see what it does here. Where's our liftoff? And look at what happened to that buying on the 15. It's just demand coming in from support and resistance traders. But we can see it a little bit better if we think about it. Let me put this up to a 5-minute and start moving this a little bit quicker. Look at the 15-minute chart. It's telling you exactly and the volume building. Sorry, I put this up a little bit quicker. Let me back it off. Dean says, that's the tricky thing for me. The low was made first in the overnight, but expected upside, but the high was made first in the U.S. session. Right. But what we talked about is what's important, is where is the supply and the demand in these charts. You have to be when Taylor was doing his trading, the markets opened at, I don't know, what time do the grain markets open? I don't trade them anymore. Around 10 o'clock, is that right? And they closed at about 2 or 3 in the afternoon, right? So he didn't have to worry about the overnight. We have to worry about that because the market's pretty much trading almost 24 hours a day now, Monday through Friday or Monday through Thursday. So we have to kind of amend this idea of highs and lows made first with the idea that supply and demand are also key questions here, right? You can see it here as well. Look, when we have this large bar up, there's demand coming in, even though there's not a lot of volume. So we're looking for lows to be made down here. Down here, same thing happens, right? We come down, well, we look because we know that there was demand that came in here and demand all the way through here. So we're looking down in here. We don't know where it's going to stop. Maybe it'll stop here, or maybe here, or maybe it's down here. Somewhere we anticipate it will stop. But we're cautious. We're looking constantly to see if demand is coming in or if supply is still dominant. And we have to wait for that shift before we can take a trade. Okay? But we can kind of stake out where we're going to be looking for these things to occur by looking at the daily and thinking about Taylor's notions of highs and lows being made first or last, and where they're likely to be made, knowing that the American session is still the largest volume being traded in the market, and that it is still going to be the dominant market to put in those highs and lows. I mean, sometimes they're going to be made in the overnight session, but a lot of times they're not. So now look at this. It's 10 of 4. 10 more minutes for this market to hold here. What do you think about this in here? Any feeling for when Asia and Euro will get higher volumes? Well, they've been doing this. They've been having the overnight market since, 1998? The Globex has been active. So that's however many years is that? It's 18 years. So I don't know. "25 minutes going sideways, no ability to rally, looks as if it will have another leg down." Yeah, look at this. 20 minutes of no progress, right? It's right coming into the end of the day. Maybe it's just going to go sideways, but let's see. We've got that target still sitting out there. These things are like magnets, and there we go. We hit the low of the day. Right, and then it pops off. It's time to get, you would trade out of that. Look at that. That's almost a 10-point move, or maybe not quite that, but 6 or 7-point move in 10 or 15 minutes. Pretty nice one at that, right? Yeah, there's a large wave down, so you would expect this to be a retracement. That's right. Okay, so let's take a look and see what happens here. So we did make lows in the overnight, but we made highs in the daily. We were expecting some follow through to the downside. And see, if highs had been made first, then maybe we would have come down, found support, and we would have been looking to buy in here, and the market pushed back up maybe to yesterday's low. Maybe we would have had a day that would have looked more like this and closes in the middle here. If highs were made first, then lows came in, and we were able to trade that back up into yesterday's low, or maybe even a little bit higher. Who knows, right? But the same concepts play out. We're still looking for where are the days, highs and lows expected to be. Now, we can't figure that out every time, but a lot of times we can. Okay? A lot of times we can. What would we be thinking about for tomorrow? Let's just play this out. What would we be thinking about for tomorrow? How likely are economic report releases? Well, how are they going to change Taylor's thing? If they're a surprise, they will change it. But most of the time, that stuff is known in advance by the bigger players. And so, I think that over 90% of the time, the technicals tell us what the news is going to do anyway. May go a little deeper, but we'd still be looking for, if news were coming out, that would catalyze this to push down. Whether the news is bullish or bearish, no one really can tell. Lows made first, perhaps a test of day too low, then an up day. Yeah, right. Look, we'd be coming in tomorrow. What would we be anticipating? Well, now we have 2 days down, right? So we would expect some follow through the next day, but we're in an up move. We're in an uptrend, so we don't expect too much to the downside. Maybe we find lows in here or maybe a little bit deeper, but lows being made first would be a good opportunity to buy, and we would look to trade at least to yesterday's low, hopefully push through that and maybe come back up around the 2-day low. Right? Come back up into here. So lows might be made first, down in here somewhere. And then we come back up, maybe we even go a little bit higher, and we come in something like this. And now we start to think about, trading in the opposite direction. Now we want to see the next day after this, lows down in here somewhere, right? Maybe a little deeper, but we'd be looking here first, and then for a push up, maybe above this high, right? But we would expect that would die off because we still would anticipate supply there. But that's how we would do this. That's how we do this. We can do more of this, right? We can do more of this. Yeah, a break at today's low and then trade higher. That's right. We're looking to make lows made first. And again, we're still anticipating that demand would be strong in here. Okay. All right. Hopefully this is helpful. Let's get to any questions on this before we end this. This is hard to do, all these charts. Maybe we should cut it down to just a couple of charts. But keep in mind too that just to kind of reiterate what we were doing here, here's yesterday's low. That should be a key point, a key level in the market, and it was. We didn't see a lot of negativity come in, although there was a lot of trading here. The market rallies up. We could draw trend channels in, just simple trend channels. We get overbought up in here. It's not a bad spot to take a trade, especially when you've got less demand coming in and clear price action in here. We want to be aware that the market can just hold gains and move up, but the odds being that this level here, if it came down to that, would be a key level and it should push off. It comes down to that, doesn't push off, comes down to that again, starts weakening not only the horizontal support but the diagonal support. No ability to rally. Then it starts to break. And we said in advance that way up in here that this was not likely to hold. Why? Because as Scott said, you know, Wyckoff used to talk about this. Engineers don't build dams one right after the other. In other words, they don't create a support point up here and then have another support point down here. If this is real support, it will hold and then it will rally. If this support breaks, then the odds are very good that the next close by support is not going to hold, that we're going to go down to the farther support, the farther out support, so to speak, where the Globex had made the low that night. And that's exactly what it did. These levels are so key all the time. I can't emphasize that enough. They're obvious. Everybody knows them. You don't need, you know, pivot numbers or Fibonacci stuff or anything like that. You just need to be looking at this logically and understand these levels as they go. And then we talked a little bit about Taylor and how we were looking for lows to be made where buying came in and highs to be made where selling came in. And that's exactly what happened in this. Okay. How much importance do you place on yesterday's close and open? Not too much. The open, today's open will be important in a range-bound market. You'll see that we go back and forth through the open numerous times and typically close near or around the open on a narrow range day, more range-bound kind of day. But that's the only time I think about it. I often find the initial phase of the down move hard to hold as the flow down wasn't great and the noontime volume was low, and I looked at the 15 and it showed no supply for 2 bars. It just oozed down. Yeah, and the low volatility ooze is the most deadly kind of selling, especially when you start getting into the afternoon on these markets. And the way to keep your head about you in this is to look at the rallies. And if they're poor like this, then, you know, you put a short on and hopefully you do it around the danger point somewhere in here. And if the market starts driving up, then you get rid of it. You pitch that short out. But it never did that. You know, a lot of times you're going to put a trade on and it's not going to work. I mean, a lot of times that's going to happen. And your attitude ought to be, okay, if it doesn't work, then I exit. Hopefully with not a big, you know, not much of a loss, if any loss at all. That's the way to play the market intraday. And if you're right, you try to hold on to it. Excuse me. If you're right, you try to hold on to it. Okay, let's take a look at the current market here. Kind of interesting. Last week we said kind of had 2 lines in the sand here. The first one was at this point. Let's see if the market would hold there and then push up. And then the second one was down here. It kind of came down to the second one or a little bit above that. And then kind of came up and didn't really give us a great push up. We kind of failed up in here. So what do we see here for this market? And we were looking for the highs up in here. Well, actually, I was looking for new highs to be made. That didn't happen. Summertime, I guess, right? And the elections, I think, are keeping people concerned about what is going to happen. I think Wall Street doesn't care for either one of the two candidates on the plates here, and so basically we have a narrow range month in August. Volatility dried up. We can see that pretty clearly here in the weeks of August. Not atypical. I haven't looked at the VIX in a while, but I'm sure it's got its seasonal tendency in August into September is for it to dry up. We see a little supply coming in here on the weekly, so and a poor close here, and so far we're not having much luck getting up above and rallying off of this. So where are we in this? Let's take a good look here at the daily. Oh, excuse me. So this red dotted line is 2134. That's the high that was put in last May, I think. Or maybe 2 Mays ago. May 2015, yeah. May 2015, over a year ago. So I think we're going to come back down to that level in the not too distant future. Maybe go underneath of it a little bit. Maybe back down into, I'm talking a little bit longer term now. Not tomorrow or the next week, but sorry, I forget now how to use this. Where's my trend line? Back down into the around here, maybe towards the end of the month. Put some weight on it. And we'll put, I don't know, that color there. I wouldn't be surprised to see the market come down here into September. But for now, that's kind of more longer term. Okay, I think we're going to come back down and test into this area. Where's my box? At some point. Okay. For now, for the next couple of days, watch 21.7. You know, the highs in here, 21. What is that? About 21.75. Watch these highs the next couple of days. Well, I can do it this way. If we can close above that, and then we have a chance to go higher, but I have a sense that we're not going to do that. You can see on the closes here, they're kind of mundane and poor. We've got, it's not a real clean line. But you've got this level in here. The market's been trading around it. I mean, it's kind of been very sloppy. So I wouldn't be surprised to come back up and test these little highs in here. Maybe I'd be surprised. Look at the closes. I mean, look at these closes here. This one and this one and this one. Just not showing real stellar. You know, we had this little spring here. We started to move off, and then we're hugging the lows in here. This is not, I don't think this is a good sign. And I don't think this is going to hold. Watch for a break down here And I think we'll probably start to head down. What's today? Thursday, right? So we are coming into a holiday, so that's going to throw a little bit in there. I'm going to suggest that we're probably not going to go very far down. Maybe around 2150, kind of a round number. Pick up the demand over here. So that's what I would suggest between now and the early part of next week. This kind of range in here. Closes are down for the last 3 days. Yeah, and the volume's picking up. You know, the volume's picking up. They try to rally it up and they can't do it. There's still demand in here. Don't get me wrong. I don't think this market is going to fall out of bed. And tomorrow is the beginning of a holiday weekend, so should be somewhat bullish, but I just don't see us getting, if we come up into here tomorrow, we probably won't make it last on Tuesday. We'll probably come back down again. Oh, we'll see. We'll see what happens next week. But I think we're in for a little bit of a pullback. Very choppy in here. All right. Any questions on that or anything that we've covered tonight? Time for dinner for me. I didn't get a chance to have dinner. I ran just before I came into this. Did my little jog for the day. Content today was good. Glad you liked it. Good session. Okay, thanks everybody. Have a great weekend. Have a good holiday week if you are celebrating Labor Day. And try to watch the tennis if you can, if you're interested in that. You might even see Helen and I somewhere sitting in the stands and at the U.S. Open. And we will see you next Thursday. Have a great one. Take care now, everybody. Bye-bye.